Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, June 14th, and this is the weekly market report. The disclaimer, as always, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you personal financial advice. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so obviously there's a lot to talk about with the Iran-Israel situation. I'll get into that later into the program in the political section. Uh, Suffice to say, oil prices did spike. There were rumors I've saw this morning that Iran was going to close the Strait of Hormuz. I really don't think they're going to do that. I'll get into why. Um, I don't think that's going to happen. For several reasons. But you never know. I mean, what I want to say about oil and energy investing, there is obviously a geopolitical component because a lot of the oil reserves are in the Middle East, which is a volatile area, has proved to be over the last several decades, several wars, and but you cannot focus on geopolitical. No one made real big lasting money in geopolitical events affecting oil. These things spike, then they come back down. The bottom line is follow the fundamentals and go from there. Now, that's not saying that this thing couldn't spiral out of control. There's always a chance things could get out of control, but I don't think that that's the base case, right? If they do close the Strait of Hormuz, for example, or if this escalates and Israel decides to blow up the oil facilities for Iran, things like that. Um, I think Iran's only exporting about 1.5 million barrels a day, and most of that goes to China. So I think that, yes, oil prices would probably be a little bit elevated, but I don't think they would go to like $120 a barrel. Um, that would be like when Libya came offline a couple years ago. It wasn't the end of the world. Prices went up, and then, other people were able to flex up. So we'll see what happens. It's a developing situation. It's not the best situation, but we'll get into it later into the program. So, again, I want to point this out. Uh, U.S. household holdings of equities as a percent of total financial assets are at basically an all-time high. We've seen previous all-time highs, previous very high rates of equities as a percent of total financial assets have culminated or ended in a uh, markets declining. Let's put it that way. I'm not suggesting that's going to happen this time, but I think that too many people have the view that buy the dip and stocks only go up. That still hasn't been purged from the psyche of U.S. investors. And so I think that um, I'm not necessarily attracted to the S&P. I understand that that's a lot of innovation going on and a lot of things are happening, but we've seen that before. We've talked about this before. But I just wanted to point out that we're still, even with has transpired over the last 6 months or a year, we're still at very high levels, and people are still going back, like Pavlov's dog, to what they've been doing for the last 10, 15 years. Just buy the dip. Stocks always go up. U.S. above all. I don't share that view. So people will say, well, you're not going to make it. You're not going to fall behind. Actually, over the last 5 years, 5 or 6 years, which I report quarterly, um, the Actionable Intelligence Alert newsletter uh, portfolio has crushed the S&P. So um, that's not to brag. That's not to say that it will continue to happen. But I think buying things that are undervalued uh, and selling things that are overvalued has worked and will continue to work in my view. So I wanted to show this. This was the equity ownership across the wealth distribution. You see up here that the top 1% own something like, um, well, now currently in 2020, 51% of all equity in mutual fund ownership is by the top 1%. The next 9% of the breakdown, was 36, owns 36%. So the top 10% own basically 87% of all the equities in mutual funds. And so you go down here, the bottom 50%, bottom 40 and 50%, they own, 13%. You see, half the population has only 1% ownership. This is the problem in a society like ours. We don't have an ownership society. I used to be a libertarian. I used to believe that everybody, we should have minimal government interference. We should have, people can be free to do what they want. And then I have spent many decades interacting with many people and reading a lot and looking around society. There's a lot of dysfunction in society. A lot of it has caused, I don't want to get too deep into this, but not everybody's the same. Let's just be honest. Some people are smarter than others. Some people have different time preferences. Some people had the benefit of good educations. Some people had the good benefit of having good parents, okay, that set them up for success. That's why I believe in an ownership society. I believe that we should create a program, that when a child's born in this country, they get we create a fund for them because compounding works over time. And this eventually, where you have half the population has no stake in the society whatsoever, this is what causes a lot of the ang this is what causes a lot of the envy and jealousy. I'm not saying that my solution fixes it, but if you have an equity stake since you're a child and it's grown by the time you get to 18 to 20 and it's, compounded and you can see that you own it, and it's not something like Social Security where you die and you don't own anything, but you could pass it on to your heirs. Then you have a different mentality about things. Okay. Now, Vivek is talking about doing something similar in Ohio. He's been talking about this recently. I posted a article about it in a free weekly, but I think that that would go a long way. Just saying, well, people are on their own. I'm a libertarian. I just believe everybody. That's coffee house crap. Uh, people people just don't have it in some cases. Some people are just dumb. I mean, there is a bell curve, and some people just are not very bright and don't understand these concepts. And so we probably need to do it for them. But they would understand if they own something, okay? And it would be helpful for the long-term entitlements program. Uh, for the younger people, they would understand that they actually own something. Are you more apt to go into the street and destroy things if you own stake in the society? We have segments of the population that don't have any stake in the society. They don't care. Okay. And, as Janis Joplin said, freedom's just another word for nothing left to lose. If you have nothing, if you're envious, if you've been marinated in left-wing ideology and Marxism since you were in kindergarten, um, yes, then that makes sense that the top 10% have everything and you have nothing. And so, as Munger said, envy is one of the worst sins, which it is because there's no pleasure involved in it. And so, what does envy and jealousy lead to? It leads to uh, socialism, Marxism, confiscation, pogroms, death cults, the whole thing. We've seen it throughout history. And so I think it's incumbent upon the people that are in the top 10% not to want to pull the ladder up and say, I got mine, but to help to create this ownership society and encourage people. It could be set up. Now, of course, the pushback will be from the left wing. That's just going to be a sop for Wall Street to get more assets under management. Look, the long-term return on stocks for the history of the stock market is 8 to 9% a year annualized with dividends reinvested. The benefits that could come to the lower classes if they were in this ownership society and had a stake are tremendous. That's just, this, in my view, will not continue forever. Okay. As the country continues to deteriorate financially, as AI, automation get more and more, pick up more speed, it's going to get more difficult for people to be involved and have a way of life. Okay. These fantasies about everybody's just going to be on UBI and pursuing their arts and crafts and, learning how to play the guitar is stupid. You have to have a purpose in life. You have to have involvement. Okay. You have to have some sense of, you know, I have a mission. And if we don't have an ownership society, we're going to create a lot of, in my view, this is, what we're seeing, a lot of people reacting over the last 10, 20 years that I've seen. So that's my view. I'm not going to continue to blare on about it, but it's something I think that policymakers should consider. Will they? Probably not, but that's what I would suggest. Again, U.S. stocks are still overvalued. This is U.S. stock valuation still near all-time highs. Trailing PE, forward PE, CAPE, price to book, price to sales, EV to EBITDA, Q ratio. This is all into one blue line here, and you're up against times where in the past, in 1929, stock market top in 2000. So that doesn't mean that we're going to decline, but we are very highly stretched in the valuations. And in the past, when we've been stretched in valuations like this, it has led to, um, mean reversion in the equity markets. But we will see. So this is a from an interview with Tavi Costa at Crescat Capital. He said, "I want to operate under the assumption the dollar is in the long-term decline." That's my assumption too. Now, let's qualify that statement so everybody understands. Because when you hear that, you start thinking like Peter Schiff or some of these people on the financial YouTube circuit or FinTwit, where they clickbait articles about the dollar collapsing. That's not what I'm saying. Okay. What I'm saying is that there are structural impediments, there are structural things in our financial system, the debt, the entitlement programs, things that are going to put downward pressure on the dollar because of the necessity to have lower interest rates to limit the amount of interest paid because it's growing based on the debt. The fact that eventually we're going to have to get into some type of financial repression, like after World War II. The fact that the entitlement spending, these things are going to overwhelm um, the ability of the government to pay. And so looking at the past and not seeing anything different, that societies react the same way, always want to take the easy way out. The easy way out is inflation. Now, that doesn't mean it's a one-way trip. That doesn't mean that the dollar is going to collapse in a year. Okay. The United States is a very large economy, but it has a lot of structural problems. Okay. It's going to be around for a while. But I think over time, over at least the next decade, I don't see all the things that are causing the dollar to weaken are in place and aren't going away, in my view. That doesn't mean that things can't get overvalued. It doesn't mean you can't have cyclical rallies of a year or year and a half or 2 years inside a long-term decade decline in the dollar. That's all possible. And so what people do is they watch these people that have been screaming about the dollar collapsing. I put italics around that. And then, assume that's going to happen in the next week or two. You can't do that. We have a fundamental slow decline in the United States. It's an empire in decline. That's my thesis. Things we've talked about it. I'm not going to get into all the reasons why we've talked about it ad nauseum, but the dollar is in a long secular decline, which I believe it is, and it will be, then that's going to be positive for commodities, emerging markets, and other things. This is what this chart shows. Now, the dollar has decreased fairly significantly over the last year, about 10%. And you see what emerging markets have done. So I believe that, the emerging market outperformance in the past has been approximately 10 to 12 years. I think we're in one of those situations now. Again, it's not a straight up run. We've had a lot of good results in a lot of emerging markets and even in Europe, for example, okay, vis-a-vis the United States. And so that's kind of, I think this is a very prescient, very well said statement, but it has to be qualified. That doesn't mean that I expect, you know, the dollar's in a long-term decline, but doesn't mean it's going to collapse in the next, week, month, 6 months, or a year. It's in a slow decline, and it will have occasional cyclical bounces as things get oversold. For example, short the dollar is the consensus trade right now. Look at how many people are bearish uh, the dollar. And so you can expect a bounce on the dollar. So I wouldn't rush out and buy, emerging markets right now because they've done very well this year. Okay. And the dollar probably needs to bounce. It's way too many people are bearish the dollar right now. Okay. So we need a bounce. But again, the long-term secular decline, the things that are causing that decline are still in place and will re, even if you get a cyclical bounce in the dollar, technical bounce, whatever you want to call it, as things get oversold or if too many people get on one side of the canoe, get overwhelmed by the secular mechanisms that are causing the long-term decline. So keep that in mind, please. I wanted to show this is from Bloomberg. Inflation is trending down. You see that the majority of the inflation is actually caused by services, okay, but they're still in decline too. You see like food, energy, and core goods. Now, you see energy is actually negative. People say, well, the prices at the grocery store are still high. Yeah, because the inflation that was caused here by all the money printing and fiscal spending during the pandemic raised price deck higher. Okay, that doesn't necessarily mean it's going to come down again. Okay, you're just seeing the inflation rate, the rate of increase is going down. Okay, inflation doesn't, we don't have true disinflation. Disinflation is the best thing for the middle classes and the working classes. That means a slow, over time, decrease in prices as efficiencies, as productivity increases, as competition increases. Okay, that would be the optimum situation because the wage earner, the person that works for a wage, okay, his purchasing power goes up in a disinflationary environment. We still are in a inflationary environment and will be forever under this current monetary system. This is why gold and Bitcoin and these things that cannot be created out of thin air have done well over the last, 5, 10, 20 years because they protect you against the debasement of currency, which we've talked about. And so a lot of people, again, don't understand inflation, don't understand what's going on. They think it's a price increase. It's not. Okay. And so if you're in a situation where you're going to have yield curve control, if you're in a situation, people will say, well, you're wrong, John, because during these previous periods, we didn't have price inflation. Yes, you did. You had it in equities and assets. That's what people don't understand. Okay. All those big increases in housing prices and stocks and all that stuff and all that money flowing into long-term bonds that caused very high capital gains for people. That's where that's where the inflation manifested. It's the Cantillon effect, which I talked about in one of the newsletters that I wrote, uh, one of the commentaries in a newsletter, I think maybe back in February of this year, or maybe it was last year, I can't remember. But talking about, you know, being as close to the money printer as possible. That means you have to own assets because you won't necessarily manifest into price inflation unless you send checks directly to people that spend money. That's not what they do. I don't have time to get into the article. I explain how the mechanism works of how the money printing transfers into higher asset prices. Okay. You should see that, understand that right now with these high valuations. Okay. So we don't have time to get into it right now, but what I'm saying is that I think that um, prices are down, but I don't think you're ever going to see the disinflation. A lot of times you'll see energy prices uh, go into be lower than they were in the previous year, but that's just because it's a cyclical commodity. But you'll notice food and core goods and core services, they always seem to stay positive. Wanted to point this out. Platinum has outperformed gold this year. It's kind of under the radar. Some people on FinTwit have picked up on it. We were on this over a year ago. We had started buying, putting it in the portfolio. Don't have any specific platinum stocks in the portfolio. I just recommend platinum relative to gold and everything else. All the other precious metals is so cheap. I just recommend buying the actual physical commodity. Um, and I think not getting into all of the reasons why platinum's going to do well. I think it will do well. It's in deficit. I think it's in a long-term bull market. Gorian Rosenzweig had an excellent article about and discussion about platinum group metals in the first quarter 2025 commentary they put out. I suggest you go there and look at that if you want to get up to speed on it, what's happening in the platinum market. Trader Ferg also had a very good article where he delved into the platinum group metals market. If you go on Substack and look up Trader Ferg, you can look at that article also. So this is from Bison Interest, structural underinvestment and exploration and production. Structural underinvestment in oil and gas exploration and production. You see from the peak in 2014 was $946 billion in global E&P spending. Last year we're at 615 billion. That's a 35% decline. However, I would suggest to you it's even further than that because I do not believe that this is inflation adjusted, okay, the numbers. So if you inflation adjust the 615 billion, the actual spending is probably a lot lower relative to 2014 dollars. So there's a couple sound bites here that Bison Interest put up here. Global oil and gas investment has declined significantly since 2014 and has yet to return to prior levels. Reduced investment may limit the ability to replace future declines in production, creating potential risks to future supply. Investments in exploration and delineation have been particularly impacted. Yes, this is what the OPEC people have said. The Secretary General of OPEC, this is what many oil executives have said, uh, because price is what rules, right? And we've seen what's happened in the Permian Basin and U.S. shale declining. Even at current prices, people are not investing, right? And so I think that we are getting some surge of production in various areas around the world, offshore in particular. But again, at some point, this is a problem. And so somebody says, well, if the prices are low, what do I need? Why would I want to invest? Well, there still are pockets of areas in the energy industry that are very lucrative and are doing very well. There was an excellent interview of a person I follow, Cole Smead. I'll put it on the weekly free email this week, where he talked about Canadian exploration and production, long life reserves, oil sands reserves, things like that, and how cheap these companies are. And of course, the retort will be, well, what about Mark Carney? He's a socialist. It's interesting. One of the first meetings that Mark Carney had was with the Strathcona CEO. So you have to understand something about politics. A lot of people don't seem to understand about politics. Politicians say a lot of things to get elected, and then they have to, unless they're completely off their rocker, they have to be more pragmatic in their actual execution of policies because the things that they may want to do in their head uh, aren't necessarily politically possible. So I don't think Mark Carney's going to get rid of the Canadian oil and gas sector. There may be additional costs incurred into it. There may be some other things, but it's not going away. And there are returns being generated. And I believe that if you listen to the Cole Smead interview that I'm going to put up in the free email this week, he makes a very good case that the what the good, decent returns you can get in Canadian E&P, that Canadian E&P is consolidating. We've seen the recent move of Strathcona to go after Meg Energy, for example, and he talks about various other companies. That whole sector probably needs to consolidate, and it's looking like it will. So that's opportunity, right? And even at these low oil prices, there are companies that are doing very well. I've talked about this before. Offshore is doing very well. There's a lot of companies, not necessarily just the drillers, but plenty of other supply and support companies, companies that facilitate the operations at the wellhead down below subsurface. These companies are doing tremendous. And so we haven't seen a, like I said, price production or underinvestment is here and has been here. And I think that, it will continue uh, until prices rise. I think even OPEC has said the underinvestment is setting us up for supply issues later on in the decade. But again, if you read, like I have, J. Paul Getty's book when he was in the oil business, How to Become Rich, if you read what Rockefeller did, impartial to the energy industry, for some reason, I just have an affinity for it. But I like to buy things, you can buy the crown jewels. I mean, they've already started to move a little bit off their bottoms, but you could have bought CNQ for valuations that were similar, Canadian Natural Resources. You could have bought in the last few months at valuations that were similar to what it was selling during the pandemic when oil was going to go away. Remember that? And oil was negative 47. And so why wouldn't you do that? That's how wealth is created. That's how Rockefeller and these other guys, you buy on the lows. You buy up the assets when they're cheap. Okay, because oil is not going away. It is going to be here for many generations. And if you can buy good quality, long life assets, crown jewels, I call them, then that's what you should do. Now, it's not as sexy as, the latest AI stock and that stuff. And that's why people, but if you can get 10, 12, 15% returns right now of some of these stocks at these low oil prices, you don't even need a higher oil price. A higher oil price, when and if it comes, is gravy. And then if you get consolidation, okay, to the best operators, cutting costs, consolidating, then you can see even you. I just think it's a tremendous opportunity at these levels, and I think at some point this is going to be a problem. This has been one of my long-term views, and you just have to be patient. This is from 9 Point Partners, Eric Nuttles. I just point this out. I don't subscribe any particular something's going to happen. I just point out that global observable oil inventories are at a low compared to like the last, 8 or 9 years. Uh, that could be not a problem. That could be a problem. Who knows? I'm not saying, I'm just saying that I find this interesting. So this is from Goldman Sachs. It's about nuclear power. Finally, everybody now and his brother understands that nuclear power is a growth industry and is going to be a big deal over the next several decades. This is good for us that are long-term investors. A couple blurbs from the Goldman Sachs paper. I will put a link to it in the show notes. By 2040, global nuclear generating capacity is expected to rise from 378 gigawatts to 575 gigawatts, representing an increase in nuclear energy share of the global energy mix from around 9% to 12%. That's it, 3% by 2040. That shows you how big the numbers are around power production. This is what people don't understand, how large they're going to do this. There's going to be hundreds of billions of dollars of investment in nuclear power, and it's only going to take up the global share of nuclear will only rise by 3%. This is tremendous. The total nuclear fleet of around 440 reactors today is set to expand to roughly 500 by 2030, and well over 400 additional reactors are in planning or proposal stage, according to the World Nuclear Association. China plans to build 150 nuclear reactors over the next 15 years, with the target of reaching 200 gigawatts of nuclear power by 2035, according to China's 14th five-year plan. The most recent COP29 climate summit in November 2024, 31 countries pledged to triple the world's global nuclear generation by 2050, alongside 140 nuclear industry companies and 14 large financial institutions. So Goldman Sachs is on board now. Why is this important? Because all the Bilderbergers are meeting right now, all the pointy shoes, and I think that nuclear power is going to be a big deal. The problem is, where's the fuel going to come from? Again, you have to be patient. That little junior that you bought that's drilling for uranium in Saskatchewan that 6 months ago was a lithium producer, that's not how you're going to make the money in this. Just buy the, you know, Sprott global, uranium, the URNM, or just buy the actual physical uranium. That's my recommendation. Okay. Then if you want to, that should be a large chunk of your investment into this. And then you should consider if you are able and capable of doing and have the time to do the proper research, then you can delve into the different juniors and then emerging SMR technologies and all the different companies and try to figure out which one. And then that's more of speculating. But I don't think that you want to miss out on this trend. And I think it requires just patience. And I think you're going to be paid very well if you're patient. The trend is definitely in place. There's no discussion about it anymore. We were early to this. We've been on this for predicting this for years. It's happening now. It's been happening. It will continue to happen. And so this is, I think, going to be one of the major wealth creation vehicles, opportunities over the next several decades. If you miss out on this, you're going to, I think, be regretting it. So here's some charts. Worldwide growth of nuclear power generation is forecast to grow in every region, as you see. 2025 in the dark, 2045 in the light blue. Asia and Oceania, North America, Western Europe, every area of the world is forecasted to have more nuclear power generation. Obviously, China and India are driving the growth in Asia. Investment in nuclear power has increased rapidly. You see over the last 4 years, it's increasing. It's going to continue to increase. Again, barring some major accident, but that still doesn't stop it long term. This is a from the article from Sprott. They do their monthly review. Link in the show notes. Uranium markets surged in May with spot prices up 5.5% and term prices steady at $80 a pound as policy shifts and strong fundamentals signaled potential repricing. Uranium miners gained 16% in May, turning positive for the year. Juniors rose 14%. Bold U.S. executive orders and legislation marked the most comprehensive federal support for nuclear in decades, boosting the uranium outlook. AI-driven power demand is driving real investment in nuclear, supporting plant lifespans and new capacity through long-term offtake deals. So we've been reporting on all this. Again, we've had about a year or so, a little bit over a year of consolidation, lack of interest, prices weren't doing what people wanted it to do, and I think that's beginning to turn now. Here's an announcement from Talon Energy, massive expansion of Amazon nuclear deal in Pennsylvania. This is from a tweet. Wow, Amazon is expanding their offtake from Susquehanna nuclear plant to almost 2 gigawatts through 2042. This is now the biggest nuclear power deal yet, beating out Meta's Constellation deal from a few days ago. And I don't put the whole press release, just the thing here from Talon. Talon expands nuclear energy relationship with Amazon. Talon enters power purchase agreement for 1,920 megawatts of carbon-free electricity at full quantity to support Amazon operations and explore SMR technology. So again, I've said this before that the requirements for data centers and AI and all these things that are happening that are growing exponentially, the way to play that, in my view, is through power sector. Originally, I think in the short and medium term, that means natural gas generation and the various ways that that's going to happen. And I also think that eventually you end up in nuclear as the years go on. And so I think this is interesting though. A lot of these businesses like Amazon, as a side note here, and Meta and Google or Alphabet, these were capital light businesses at one time, and their margins were very high. Now they're becoming very capital intensive, having to build these data centers, having to go out and partner and figure out the power that they're going to need for these. Uh, do you really, what's going to happen to the margins at, for example, Amazon or Meta, if they have to get into the power generation business? What if they start getting into a public-private partnership to finance and build nuclear power plants? What happens to their margins? What happens if the project blows up in their face, like some of these big projects have done in the past? So it's something to consider that they're transitioning from high margin, capital light businesses, knowledge based, with into these areas that may be lower margin and more complicated. So it's interesting. Will they be able to fully offload it on the utilities and just do power purchase agreements, or are they going to have to come and spend a lot of money and get more involved? Because they're just not going to be able to build these centers. At some point, they're going to start affecting the grid in the area if you start taking in all the power. Okay. I remember the last couple of years that I was in renewables. I don't know how it is now, but a couple of years ago, just trying, like, this is in this Susquehanna plant's in PJM, uh, the ISO area, PJM, New Jersey, Pennsylvania, all those areas up there. And just to get a renewable plant permitted so you could get it into the queue, because they have to do studies, right? How is your plant going to affect the grid? What's going to happen? What are you doing? All this paperwork you got to do. And then it goes in and gets reviewed. And you're working with the ISO. When you bring the thing online, it's a whole complicated thing. You don't just turn a switch on. Hey, I'm done building this plant, close the breaker, and you're in business. That's not how it works. And so they are so backlogged with projects. They had like a 2-year backlog at one point. That's just PJM. So there's a lot of plates in the air, and things are going to get complicated for these people because they want to build out this AI. They want to build out their data centers, which is a good thing. I don't have a problem with that. And they're so energy intensive. Where's the power going to come from? So that will be the challenge and an opportunity. We've already talked about the gas turbines. I mean, they're killing it. If you're Siemens, Mitsubishi, General Electric, GE Verona, the big players in gas turbines, hey, they're killing it right now. They've got orders going out for a couple few years. So there you go. So this is pretty amazing news. Again, all the Bilderbergers and all those big point issues have gotten together. They're all on board nuclear. This is what I said would happen eventually. I'm not the only one. This was inevitable. I put here at the title of the slide, the pointy shoes come out of their hole when they smell a profit. Now this trend's in place. There's no reason to hold back. Everybody, the whole zeitgeist has shifted, positive nuclear power. And so here's the headline from the Financial Times. World Bank lifts ban on funding nuclear energy in boost to energy to industry. Lenders, president says it would support projects extending the life of existing reactors. I didn't read the article. This is sufficient. This is more evidence that we're on board the trend here and we're going in the right direction. Again, you have to ask, where is all the uranium coming from? We're not seeing that ramping up. So without looking at what this chart is, would you be bullish this chart or bearish? This is a chart for silver. I think it's time to start buying some silver stocks. I've been reticent to do that just because silver is kind of like natural gas. It's so volatile. But I think that there could be a pullback in silver and gold. I've been saying that. But I think it's time to start moving into some silver stocks. I mean, I think you could even go with a name like Coeur d'Alene. It's not a well-run company. I really don't like the management, but the thing could five bag if silver goes to 50. It's just one of those things that, if a hurricane comes, even turkeys fly. So, um, you know, I think there's probably more opportunity in select juniors. I haven't done a lot of research into a lot of the silver stocks. Juniors. I probably need to do that. But like I said, if you just want a silver stock, you know, again, silver bullion's good to buy too if you just want to hold the metal. Uh, but a company like Coeur d'Alene, I don't think you can go wrong with as long as silver price can moves higher, which I think it will over time, significantly higher than even a company that's not particularly well run in my view, because that's a big name where a lot of people are institutional money will go into. It's something people recognize and they'll block into it. So I think it could do fairly well if silver goes on a run, which this chart pattern looks like, the long-term chart's looking good here. Okay, so this would be the time that if you do not like my political views, if you do not like my geopolitical assessments, that you should consider tuning out. Okay, so I'm going to talk about the strikes that Israel's doing on Iran. Um, First of all, I don't think currently, as it currently stands, I don't think this really has much to do with the nuclear program. Obviously, I don't believe anything the media says. I don't believe what the IEAE says, the International Atomic Energy, whatever oversight. These are all globalist run things. They will say whatever their masters tell them to advocate. So the idea is we cannot let Iran have a bomb. They were going to have the bomb, so we had to go after them. Okay. Well, if you listen to what Bibi Netanyahu has said recently, like yesterday, these strikes will continue until the regime in Iran is collapsed. Okay, and so if you look at this, what I got, it's from one of the things on Twitter that tracks war. I mean, they're going after the nuclear scientists. They're going after. They've chopped off the head of the top military guys. They've killed them. They're going after the Ayatollah. They're going for regime change. The pretext being, in my view, my opinion, the pretext was, well, they're going to have a bomb and blah, blah, blah. Okay. Even though that the United States and Iran were supposed to start the sixth round of negotiations tomorrow in Oman about this whole thing, but that's been canceled. Okay. Uh, I think that the idea that the United States is not involved or didn't know, that's total crap. I'm quite sure several countries were involved. Um, in NATO countries and stuff like that. Obviously, the tankers that refuel the jets, the Israeli jets, I think are probably U.S., if I'm not mistaken. So they want to have this, plausible deniability for the president and for the U.S. Government, but the United States is basically, in the pocket of the Israelis. That's been the case forever. We've spent $21 trillion in these Middle Eastern wars over the last 25 years. This is I mean, General Wesley Clark talked about this. He talked about how they came up with this plan 30 years ago, 25 years ago, and they've taken out these countries one by one. Um, those are just the facts in my view. Um, at the risk of being labeled an anti-Semite, I don't really have any kind of opinion on Israel. I find it interesting, you have several dynamics involved here. Um, Obviously, going back to the World War II and post-World War II, uh, the sizable evangelicals here in the U.S. that follow the whole Darby dispensationalism system where they believe that Israel has a big part to play in that. I don't subscribe to that. They're a big force here. The neocons are a big force about this. There's a lot, again, it's not just one faction, it's all these different factions. But I will say this, that I think Israel understands that it's running out of time. When the boomers in the US die out, the support for Israel is probably going to die out too. You can see younger people, Generation Z, Generation Alpha, they have no historical knowledge or caring about the Holocaust. Doesn't affect them. They don't even know, like, they're not educated on these things, and they're just not going to want to be involved in these things. So this is a boomer type post World War II set people that subscribe to this support of Israel that we have. I don't personally, you know, It's a colonial state, just like the U.S. is. I mean, it's not anti-Semitic or mean to say this. Most of the people in Israel that are in the government and running things are, descendants of Europeans that came there and colonized it after World War II. I mean, it's nothing. These people are not the part of the original 12 tribes of Israel. And so, I find it amazing that a lot of people, they don't want to get into this stuff. The if you, I don't make policy in the United States, so it doesn't really matter what I think about it. Um, I kind of highly respect and like the guy like Rabbi Kahana when he was alive. He talked about these things. When people talked about the two-state solution, he was against it. He was talking about expelling all the Arabs from Israel. He understood the demographic issues, okay, that Israel's facing now. The fact that they know they're running out of time, that the boomers are going to die off eventually, and support for Israel is probably going to decline over time from the U.S., that the U.S. is in long-term decline and won't have the ability to project power all over the world because its finances. They know this. And so they have to get this done. And so you see that they got the regime change they wanted in Syria, and uh, Syria's in chaos, and Lebanon's in chaos. They have a détente with Egypt that's been in place for a while. U.S. helps, with that by paying off the Egyptians. The Saudis, being enemies with being Sunni Arabs, Sunni Muslims, and Iran theocracy being Shia. So if they can topple the regime in Iran, it's supposedly going to lead to a long-term détente and this new era of prosperity, and everybody's going to get along. I just don't see it for various reasons. But again, how does it affect? I think Israel exists. The United States exists. We, moved westward, and the Indians were in the way, so they liquidated them and put them on reservations. That goes without saying. Um, are we going to give everybody their land back? And, that's it's not going to happen like that. That's the history of the world. And so these people came, they colonized the place, they were successful. That caused angst with their neighbors, which were predominantly Arabs that were displaced, or because of their particular religious persuasion, they don't like Jews. And so, you're going to have nonstop conflict over time. So that's just the way things are. I don't know how our being involved in this benefits the average person. See, I'm concerned about America first and the average person in the US, not the neocons, not the people that run the defense contractors, not the evangelicals that if you go to an independent Baptist church, you'll see an American flag and an Israeli flag. I'm not interested in what they think. I'm interested in the average person here and how does this benefit us? It doesn't. We've put ourselves in a tremendous amount of debt. We're involved now in another war, possibly. And, I don't see how this benefits the average person. Nevertheless, that doesn't mean anything I say has no bearing. So let's focus on the facts. Do I think that we don't know what's going to happen? We don't know how the potential for this to escalate. I think this is different from the strikes last year when they just did a tit for tat and then they kind of de-escalated. I think if Netanyahu is saying, and the current government is saying in Israel that these are going to continue until the regime is changed, I don't know how you do that simply with bombing and, commando raids or however you have to give them credit. This was a very well thought out, planned, executed situation by the Israelis. And so I think the Iranians were taken by surprise. But, they're responding now. They're sending ballistic missiles and missiles to Israel. So we don't know how far this will escalate. Um, if you send enough ballistic missiles, which, they don't have uh, an unlimited supply, I'm talking about Iran, and you kill enough people, does Israel then have to escalate? They say that they will not go after the oil exporting facilities like at Karg Island and things like that. But if enough Israelis are killed, then they have no option but because politically it becomes, you have to retaliate, and that's how things are. Is it possible that the oil facilities could be attacked and blown up and cause, you know, oil prices to stay higher for a while? Yeah, but you're only talking about Iranian exports of about 1.5 million barrels a day. Could they fully take them offline? I don't know. Um, could they close the Strait of Hormuz? I think they could try. They could attack shipping or disrupt shipping. Then I think the United States Navy would get involved and various other NATO countries, they would get involved. That's how you can go up the escalation ladder. So we don't know. This thing just kicked off, but I suspect that we're just going to have to wait and see what happens. Do I think oil is going to go to $120 a barrel? No, not right now. Do I think that these oil prices are going to hold? No, I don't. One of the reasons I think that Iran's not going to want to escalate too far is because they need oil revenue, right? I mean, this is Iranian oil revenue versus military spending 2019 to 2023. The red line is the military spending, which you can see has been increasing. Up until 2 years ago, it was over $10 billion a year, but you see oil revenue is less than $2 billion a year. So the economy is under a tremendous amount of sanctions. The oil revenue is already less than it could be or should be in an environment if you topple the regime. Obviously, I guess you can make scenarios out where oil goes to $120 a barrel. You can also make scenarios out where the regime topples and you get a democratic government and sanctions are removed down the line, and Iran gets up to 5, 6, 7 million barrels a day of oil production, in 5 or 10 years, and oil prices stay at $40 a barrel. I mean, you can make various scenarios, but what's probable? Again, right now, I don't. I'm not a military. I'm not going to be like people on Twitter and try to say that I'm an expert. We just have to see how this plays out. Again, as I said earlier in the presentation, if you're basing your investments in oil and energy on geopolitical events, that's a hard way to make money. If the price of oil goes up and we already have oil stocks, they will do well. If, let's say, oil, for example, let's put a scenario out there. Let's say that the oil facilities were attacked by Israel because we go up the escalation ladder, they take them out. And then the Iranians start disrupting shipping from the other oil producers in the Gulf, and oil was to spike to 120. Yes, I will take profits on all the oil stocks, knowing that eventually this calms down and the oil prices come back down. Okay, but that's not my base case. Okay, that's an outlier. That thing you got to take profits. Okay, it was similar to what happened when the Russians invaded the initial invasion of Ukraine, when oil prices spiked, coal price, that was an opportunity to take some profits, okay, and then reinvest once things calm down or reset. So again, we have to. I'm not an expert. I'm not privy to what's going on in the State Department or the Defense Department or the Knesset or the Israeli Defense councils. No one's talking to me and telling me what they're going to do. I'm like you. We have to react. But again, um, is there a chance this thing could escalate? Yes. Is it possible it could get into a full-blown war? Yes. Um, you know, we just need to see what's happening. I've seen other people say, well, this is bad for China and Russia, and this is taking out one of the legs of the axis of evil and all these things. Look, BRICS is going to continue one way or another. Um, again, all of the Israel being part of the, U.S. hegemon, European Atlanticist hegemon with, basically the outpost of the Europeans in the Middle East. That's how I view it. But this is all in terminal decline. This is why the Israelis need to do what they're doing because they know that over the years, things are going to get more difficult as the U.S. sponsorship, I feel will probably decline over time monetarily. And the younger generations here just aren't tied to the historical narrative that is the modern state of Israel. I'm not going to get into all that, but that's just what I think. You see that all these, whether you agree with it or not, you can see it in the protests. You can see the people, younger people coming out. They don't particularly care for what the policy is in the Gaza Strip with the Israelis, regardless of what happened on October 7th. So, I mean, this is just the way things are in my view. So that's kind of a longer term thing. I think that being part of the West as Israel is, it's tied to the hegemon. But I think that Do I think that the president didn't know about this or the United States was out to lunch? No, but I do think that Iran got rug pulled by DC. They were supposed to start negotiations again about the nuclear stuff tomorrow. That got rug pulled. And I think that was helpful to Israel in its ability to uh, carry out these attacks because I think the Iranians probably thought, well, we'll just continue negotiations. I'm not saying that the Iranians are victims. They do a lot of bad things. This theocratic regime is not, I'm not going to advocate for them, but that's who's in power right now, and we have to look at things for the way they are and not how we want them to be. So we need to see what's going to happen over the rest of the weekend. As information comes in over the following days and weeks, we'll be able to make further assessments. But I wouldn't currently right now, I don't see things escalating to that point where oil's going to be affected and go to $100 a barrel. If it does, again, we'll sell. We'll be trimming and taking profits if that happens because, um, again, the history of this is that geopolitical events will spike the oil price. Uh, Stocks and equities that are related to oil will spike, but then as things calm down, which they inevitably do, then the oil price comes back down, and then we would be able to rebuy a lot of good companies, with our excess profits gained during the spike. So that's kind of how I'm looking at this. So shifting over to our president, they have this term now I picked up on Twitter or X called Taco. It's Trump always chickens out, and that's kind of what I've been saying now. I think that's pretty good. I mean, it's done in jest, obviously, but I think it's kind of instructive because whether it's tariffs, whether it's the budget, whether it's energy, I mean, a lot of things are just not, again, politicians say a lot of things when they're on the stump, when they're running, and then the realities and the pragmatism takes over. You know, what is politically possible is not necessarily what you promised. And so here's a tweet from the president. The president was kind of one of these guys, even I said this before during the last administration, whoever gets to him last is kind of what he goes with. So if you're sitting down with him and you advocate for a policy like Stephen Miller, I'm sure, and some of these other folks that really want to do massive deportations, you know, get this thing ramped up, he's on board with it. He gets it. But then if you get somebody calls him that he, gets in his ear, he has a tendency to do things like this. So what's the tweet say or the Truth Social post say? This is 6/12/25. Our great farmers and people in the hotel and leisure business have been stating that our very aggressive policy on immigration is taking very good long-time workers away from them, with those jobs being almost impossible to replace. In many cases, the criminals allowed into our country by the very stupid Biden open borders policy are applying for these jobs. This is not good. We must protect our farmers, but get the criminals out of the U.S. Changes are coming. So here we go. So the farm lobby, hotel and leisure business, of which he's in, by the way, they own a lot of, resorts and hotels and things like that, are staffed with a lot of low wage, low working, lower middle class, lower wage working people. A lot of them typically happen to be Hispanic. Okay. I'm sure a lot of them are illegal aliens. It goes without saying. And so I'm sure now that you're rounding them up, there was a chicken plant, processing plant that got raided and by ICE. I saw that on the news, and the guy was a white guy that owned it, and he was being interviewed. Oh, I had no idea. We used verify, blah, 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 and so they had closed the plant down. I saw another plant, beef processing plant, that was having problems staying open because, nobody worked there. Well, you have to raise the wages to get people to work there. Okay. And that's a transition period. Yeah, I wouldn't want to work in a meat packing plant. It doesn't really appeal to me. But, a person that is, working at Starbucks or, McDonald's and says, hey, we'll give you this meat cutter job with benefits for $22 an hour. Does the price of meat go up? Yes. What does that mean then? That means you have to seek out as management productivity gains, automation, different ways of doing business, what have you. That's what management's all about, not just hiring a bunch of illegal aliens and then dumping, if the guy gets hurt, workman's comp, or, you just kick him out the door and, after he chops his hand off with no benefits and then he goes to the emergency room and then the rest of us pay for it. That can't hold either. But see, this is how the president is. He was not going to start any more wars. Why is the United States involved with this thing with Iran? Okay, well, you have to look at, who was one of the major contributors. I'm just pointing out the facts again, at the risk of being called an anti-Semite. I'm just telling you the way things are. Cui bono. People give money to politicians not because they think they're cool people and they want to hang out with them, because they want them to do their bidding. And so Miriam Adelson, who owns big chunk Sheldon Adelson's widow, she owns a big chunk of Las Vegas Sands. Okay, Doc, she's a billionaire. She gave the Trump campaign $150 million during the campaign. She's Jewish. Sheldon Adelson was a big supporter of Israel. So is Miriam Adelson. You pay you. How does Washington D.C. work? They don't listen to you with your signs stapled to a stick and you're walking around out front. No, you have to put money in the sock. That's who gets listened to. Okay. If you put money in the sock, they pick the phone up. They're not interested in the letters that you write or walking around in front of the Capitol building with a stick with a piece of cardboard taped to it with your, inane proclamations on it. That doesn't do anything. The way the system works, I don't like it. I don't think it's the right way for it to work, but this is how it works. You put money in the sock, they pick the phone up. Okay. You give them money, they get in bed with you. This is how things work. Okay. And so I'm sure that the farmers that rely on cheap labor, we have guest worker program. I think there's an H-type visa, I forget the number, for temporary agricultural workers. Okay, that means paperwork, and you have to, have a staff to do that, and that costs money. Why can't I just go down to Home Depot and get 20 guys? Okay, that's what people prefer because that's easy and cheaper. Well, that's not how things should work. But again, the president, he chickens out a lot because what's going to happen when this whole summer, in my prediction, this summer, for example, is going to explode in a lot of major blue cities. Okay. They're already getting prepared. All these Marxist, Leninist, proto-communist organizations, riffraff, Antifa, all these people, they're going to, it's going to be one long hot summer. What's the president going to do? Is he going to hold the line? Is he going to back down? Are we going to have law and order? Okay. Are we going to start arresting some of these mayors and stuff that are not cooperating, that are in direct violation of federal law? How far is he willing to go? Or is he going to do like he normally does, talk big and then chicken out at the end? The guy's 79 years old. He's like a fighter, I think that's, still has vestiges of his previous self, but the guy's old. Okay. And, what's the legacy here? What's he really trying to do? Okay. And again, he's the kind of guy that if you're the last guy to get to him, then you can convince him, even though he might have told other folks that he was going to go one direction. He just seems to be that type of person. So I think this is a perfect example. And we can't stand for this. Okay. What's MAGA going to do? MAGA to me is kind of like Tea Party. Okay. They're getting rug pulled because people don't really understand how politics works in this country in 2025. He who gives the money, he who pays the piper calls the tune. That's what these people respond to. It's unfortunate, it's cynical, but this is the way things are, in my view. Okay, guys, that's it for this week. Appreciate your continued patronage. A lot of people signed up for the newsletter recently. I hope you're finding value there. Again, we have the free product, the free email that goes out. It's a curated free email that I send out with all the articles, videos, podcasts that I found interesting over the previous week or so. I share that with you with some commentary in there. We also have the paid product, which is the Actionable Intelligence Alert newsletter. With that, you also get the Actionable Intelligence Alert dividend newsletter or dividend portfolio, both of which are crushing the S&P this year, by the way. And so I think that, so far, so good. We're continuing to do well. We appreciate your patronage. And we thank you for listening and tuning in. We'll talk to you next week. Thank you.